Inflation is now at 3%. This is what the Friday data point in the CPI report told us. Now, the mandate for the Fed was that we should reach a new 2% level at some point in their rate cutting cycle. However, they have signaled that they are going to be easing. So quantitative tightening is ending and quantitative easing will begin in the next few months. However, we are now at a much higher level in terms of inflation than we used to be at the low from 2021. 3% now seems to be the new normal. And might it be that this is a false mandate by the Fed that could turn into a real crisis very, very soon? Let's discuss this right after the intro. Hello and welcome to yet another video from Bloomberg Capital. My name is Patrick and today we're going to be looking at the oil charts. I have a couple of stocks brought with me. In this episode we're not only going to discuss the oil chart in itself, but also discuss a little bit about the inflation situation with the Fed and discuss CVX, XOM and Shell. So let's start. We are probably on the brink of a new rate cutting cycle. The Fed has already cut rates in September, and now traders are betting on 2 additional rate cuts this year. This means that we are accepting 3% as the new normal, baseline, and prior to the inflation crisis in 2021, the baseline inflation was at 2%. So a whole 1% of inflation, and we're cutting into this inflation rate with more. We will be looking at a speculative frenzy that could start from December, especially when we get that rate cut, and then inflation could get out of hand. The market shouldn't really care about it until it cannot ignore it anymore. And this happens usually at the end of an inflationary cycle, especially, for instance, when raw materials such as oil reached. Now you might ask, Patrick, oil didn't do anything for the good part of the last 4 years. And what would make you believe that oil prices might be bottoming? Well, this is exactly why I'm producing this video at the moment. I do think that oil could be at a very meaningful bottom at the moment, and we could see oil prices rise. Now, inflation was very moderate because oil really didn't do anything. So if it now rises, it should also take inflation with it. So the 3% that we got on Friday might just be the tip of the iceberg, and we are looking at a real train wreck, Titanic type of situation with the entire economy. So that could mean that we get rising asset prices in the short term very quickly, but then also very, very deep crash whenever they peak out. So let's talk about this and see where oil prices could go from here. Looking at the charts, we now have a potential double bottom formation in the making. Note that this is not confirmed yet. For that, we should go above $75. And if that happens, we will confirm a double bottom formation. A double bottom is basically a W shape type of a chart pattern that usually brings higher prices with it. And so far, we have attempted a low here in May of this year. And last month, we were really eager to see about the oil prices right there because we did assume that this was the low for the oil prices here. However, we made another lower low, but we couldn't really make it below here, and no new lows were formed. This is very important because this would tell us that there's more fundamental strength underlying in here, and we could get a bigger rally. So far, the takeoff is better than the last decline over here, and we could see oil prices go to $80 in the short term. Now, this won't come without corrections. I expect the first correction to come in at the 66 level. However, I think the next target for this move, especially after some consolidation, should be the 80 level. This would also confirm that we are in a W type of bottom formation, and this could therefore be a long-term bottom for oil prices. Where might this lead us? Well, we could get a really sharp rally because all of this is just very weak price action. You can see the compression in there. So there's already lots of buying happening here, and rising into that, all the shorts that were taken here will get closed in an instant. So it is possible that we consolidate at the 80 level and then just skyrocket out of this into new highs. So we are expecting as the company that we should get higher oil prices, and at the very least, we're expecting 125 by April of next year. This would mean that oil should rise here very swiftly and then consolidate. And during the middle half of next year, we should see the new all-time high for oil right there. So how would this translate? Well, this is the inflation problem that I was talking about, that oil prices might skyrocket and therefore inflation gets really out of hand. This would also bring really many problems to the economy and also lead to our next probable financial crisis. The stock market is overvalued, something's going to bring it down, and it's not a if question, but a when question. And I think this is the catalyst that could be exactly that. Now, let's look at a couple of opportunities that we could, in the meantime, take advantage of. And this would be, first of all, Chevron Corporation. So far, Chevron has been more or less in a range where it absolutely didn't do anything. Right? This is what we see at the moment. And so far, we have tried to break down lower here. However, price has quickly rebounded to the upside. So far, I do think there's more consolidation needed and more compression as well. So we could form a hinge type of formation. However, after that, I would expect a test of the range highs over here, and then maybe a consolidation before this pattern breaks out. So there's a good potential there, and we will keep watching that price action very, very much like a hawk, so we can get involved around these lows to basically benefit a rally that should be similar in strength than this one. Now, this rally is very strong due to quantitative easing. So this rally should be similar in character, however, a little bit weaker because we expect the economy to roll over. So if that was a 160 or 70% rally, we expect a little bit less from here. However, a doubling should definitely be possible here. Moving on to XOM, we have the similar chart formation where we are building a base at higher levels, and you can see that there is a compression happening over here. We're also creating higher lows, as you can see from the chart bottom right there, where we had this violent decline. However, it's being negated and we're forming consolidation ranges at each higher low. This is a sign of strength, and this should lead us to a very big breakout very, very soon. The question is only when, and I think with the rising oil prices, this should also go higher. How higher might it go? Well, we can simply take this leg as our first reference point, and the rally that should result out of this should be a little bit weaker. Since this is all the helicopter money type of situation here, we don't expect the same slope. However, if this is about 240%, how about we take half of that? So 120% would put us around the $200 level, and $200 is a very big psychological point, and this is something that I would look for. We do these types of analyses on the regular in our Discord, and it's completely free to join our community. So just click down in the link in the description and you will get led to our Discord server. There you can ask us questions, talk about stocks, and also subscribe to our premium group where we offer you daily analysis of 180 stocks, precious metals as gold and silver, the mining stocks, Bitcoin, Ethereum, and a lot of altcoins as well. So there's definitely everything for everyone there. Just check it out. Moving on to Shell. This is not an American company, and what we can see over here, it poses a lot of strength compared to all the others we saw. You can see, if we compare it on a weekly chart, they all are consolidating in some way, shape, or form, and Shell is doing the same thing. However, it's doing it very orderly, and this was a very steep up move. And this is the moving part here. Since all of the others really had a great meltdown, you can see the spacing between the lows over here and also over here. This is big. This one is rather small compared to it because we tried to get really violently down. However, if you look at the monthly chart, our close is around here. So this didn't really extend far lower. So this is a sign of strength, and this should therefore extend much further than the other companies. So my favorite investment here would actually be Shell, and this was also measured in euros. So you have the strength in euro and a weaker dollar. That should give you less currency risk, because if the euro rises, your dollar value rises in itself, but also a great stock that might have 100% still in its leg to the upside, where after we expect a consolidation at the very least. So 100% plus the euro strength gives you the biggest upside type of a move. Hopefully you did like this analysis. If you did, please like, share, and subscribe to our channel. Also do check out the link for the Discord down below, and I'll see you guys next time. Goodbye.